Dreaming of owning your own home in Texas? That dream may be closer than you think. Welcome to this training on the Texas State Affordable Housing Corporation's Mortgage Credit Certificate, also known as the MCC. Buying a home is one of the biggest financial decisions you'll ever make, and it's normal to feel overwhelmed by all the terms, paperwork, and requirements. That's exactly why this training exists. The MCC tax credit is one of the most valuable and most misunderstood benefits available to eligible Texas homebuyers. In this video, we're going to take our time and walk through everything you need to know. We'll explain what an MCC is, how it works, how it can save you money year after year, and how it may even help you qualify for your mortgage loan. We'll also cover the step-by-step process to receive your MCC, what documents you'll sign, how and when you'll receive your certificate, and how to properly claim the credit on your federal income tax return. We'll also discuss important life scenarios, like refinancing your loan, selling your home, or renting it out, so you understand how those decisions affect your MCC. By the end of this training, you should feel confident not only about how the MCC works, but also about your responsibilities as a homeowner using this benefit. Let's get started. So, what exactly is a mortgage credit certificate? A mortgage credit certificate, or MCC, is a federal tax credit designed to help make homeownership more affordable for eligible buyers. It allows you to claim a portion of the mortgage interest you pay each year as a direct reduction to your federal income tax liability. This is an important distinction because a tax credit works differently than a tax deduction. A mortgage interest deduction reduces the amount of your income that is subject to tax. A tax credit, on the other hand, reduces the amount of tax you owe, dollar for dollar. For example, if you owe $5,000 in federal income taxes and qualify for a $2,400 MCC credit, your tax bill could be reduced to $2,600. Under TSAHC's MCC program, eligible homeowners may claim a credit equal to 15% of the mortgage interest they pay each year. This benefit can be used every year for the life of your mortgage, up to 30 years, as long as the home remains your primary residence. Now, here's an important point to understand clearly. An MCC does not lower your mortgage interest rate, and it does not reduce your monthly mortgage payment. Instead, it provides savings when you file your federal income taxes. Many homeowners use those tax savings to help cover household expenses, build savings, or offset the overall cost of homeownership. Common MCC myths and misunderstandings. Before moving on, let's clear up a few common misunderstandings. First, the MCC is not automatic. Even though TSAHC issues the certificate after closing, you must claim the credit each year by filing IRS Form 8396 with your federal tax return. If you forget to file the form, the credit will not be applied. Second, the MCC does not replace your mortgage interest deduction. Instead, the two work together. The portion of interest used to calculate your MCC credit cannot also be deducted, but the remaining interest may still be deductible if you itemize. Third, the MCC only applies while the home is your primary residence. If you move out and rent the property, you must stop claiming the credit. And finally, refinancing your mortgage does not automatically transfer your MCC. You must notify TSAHC and request a reissued MCC, which we'll explain later. Understanding these points now can help you avoid mistakes and confusion later. Benefits of the TSAHC MCC. So, what are the key benefits of participating in the TSAHC MCC program? The most significant benefit is the ongoing federal income tax savings, which can free up funds for other important expenses. This can make homeownership more affordable in the long run. By reducing your federal income tax bill each year, the MCC can free up money for other priorities, such as home maintenance, emergency savings, education expenses, or simply more breathing room in your monthly budget. One of the other key benefits is an MCC can help you qualify for your mortgage loan. This tax credit isn't just about future savings. Lenders can often count a portion of that credit as additional qualifying income when calculating your debt-to-income ratio. For example, if your MCC provides an estimated $2,400 in annual tax savings, some lenders may divide that amount by 12 and count $200 per month as qualifying income. This can help offset other monthly debts and may improve your chances of approval or help you qualify for a higher loan amount. This can improve your overall loan eligibility. MCC credit rate, how it works, and calculator. Let's take a closer look at how the MCC credit is calculated and how much you could save over time. TSAHC's MCC credit rate is 15%. That means TSAHC allows you to claim 15% of the mortgage interest you pay annually as a tax credit when you file your income tax return every year. This credit is available to you for the life of the mortgage for up to 30 years, or as long as you still live in the home. Each year, you'll receive a Form 1098 from your lender showing how much mortgage interest you paid that year. You then calculate 15% of that interest amount to determine your MCC credit. What this means is if you paid $16,000 in mortgage interest in a year, a 15% MCC credit means you could receive a tax credit of $2,400 that year. 15% times $16,000. Over multiple years, that adds up to a lot of savings. To help you calculate all the money you're saving, TSAHC provides an online MCC calculator so you can estimate your tax savings over 30 years. To use the calculator, just enter your loan amount and interest rate, and the calculator will show your savings over 30 years. This tool will help you see how much the MCC will help reduce your overall interest paid. To benefit from the MCC, you must owe federal income taxes. If you owe little or no federal tax in a given year, the amount of credit you can use may be limited. However, any unused portion of the credit may be carried forward for up to 3 future tax years, subject to IRS rules. Who qualifies for a mortgage credit certificate? Now that you know all the amazing benefits of an MCC, you might be asking yourself, how do I qualify? A mortgage credit certificate is available to eligible homeowners who meet TSAHC program requirements. In most cases, borrowers must be first-time homebuyers, defined as someone who has not had an ownership interest in their primary residence during the past 3 years, unless they're purchasing in a federally designated targeted area, or are a qualified veteran, even if they have owned a home recently. Buyers must also meet household income and purchase price limits, which vary by county and household size. The home must also be used as your primary residence, and the MCC must be applied for before your mortgage loan closes through a participating TSAHC lender. Program eligibility is confirmed during the loan approval process to ensure all requirements are met. How do I get a mortgage credit certificate, MCC? Do you want to know how to get an MCC? Receiving a mortgage credit certificate is a multi-step process that begins before your loan closes and continues throughout the life of your mortgage. Your lender and TSAHC work together to make sure all program requirements are met, so your MCC can be issued correctly. Here are the steps to getting an MCC. Step 1. Apply through a participating TSAHC lender. To be eligible for an MCC, you must apply with a participating TSAHC lender who will combine the MCC with your approved DPA program. MCCs cannot be issued after closing, so it's important that your lender knows early in the loan process that you want to use this benefit. Step 2. Pre-closing review and compliance. Before your closing date, your lender must submit a pre-closing compliance package to TSAHC for approval. This package confirms that you meet all MCC eligibility requirements and that your loan complies with program guidelines, and it includes MCC-specific documents that you, as the home buyer, are required to review and sign as part of the approval process. TSAHC reviews all pre-closing compliance packages within 1 business day, so this will not delay your closing process. Once approved, your loan is cleared to move forward to closing with the MCC in place. Step 3. Closing on your home. At closing, you'll sign your standard mortgage loan documents, along with several TSAHC-specific documents required for the MCC and any other TSAHC programs you're using. Your lender will review all documents for accuracy and submit the final compliance package to TSAHC after closing. Step 4. Post-closing review and MCC issuance. After your loan closes, TSAHC reviews the final compliance documents. Once everything is approved, TSAHC issues your official mortgage credit certificate. Step 5. Receiving your MCC. Your physical MCC certificate will arrive in the mail approximately 30 to 60 days after loan closing. The packet you receive will include the physical copy of your mortgage credit certificate, instructions on how to file, a sample 8396 IRS tax form, and information about recapture tax. This certificate is an important legal document, so be sure to keep it in a safe place and make copies for your records. You may need them when using the MCC credit on your taxes, should you sell or refinance, or if any questions arise. If you ever lose your certificate or need another copy, please contact TSAHC's MCC compliance team at mccompliance@tsahc.org. Step 6. Using your MCC each year. As long as you live in the home as your primary residence, you can claim the MCC benefit every year when you file your federal income taxes. To claim the credit, you'll use your annual mortgage interest statement, called Form 1098, along with IRS Form 8396, which calculates your mortgage credit certificate tax credit. You may file Form 8396 electronically, by mail, or through a tax professional. If you're unable to use the full credit in a given year, any unused portion may be carried forward to future tax years for up to 3 years. TSAHC cannot provide tax advice, so consider consulting a qualified tax professional if you have questions. Remember, your MCC remains valid as long as you continue to live in the home as your primary residence and follow program guidelines. But what happens if you want to refinance, sell, or rent out your home? First, let's talk about refinancing. If you refinance your mortgage loan at any point, your MCC does not automatically transfer to the new loan. To continue using the tax credit, you'll need to apply for a reissued MCC. This process starts by contacting TSAHC after your refinance loan closes, so your benefit can carry forward correctly. Next, if you decide to rent out your home, you'll no longer be eligible to use the MCC tax credit. The MCC is only valid while the home remains your primary residence, so converting the property to a rental ends your ability to claim the credit. Finally, if you sell your home within the first 9 years, you may be subject to what's called recapture tax. Recapture tax only applies if all 3 of the following conditions are met. You sell the home within 9 years, and you earn a net profit from the sale after all costs are paid, and your household income has increased more than 5% above the income limit for your county at the time you purchased the home. It's important to know that recapture tax impacts fewer than 3% of MCC participants because most homeowners either don't sell within the 9-year window, don't earn enough from the sale of their home, or don't have the income increase required to trigger recapture tax. Detailed recapture information, including income limit tables, is included in your original MCC package from TSAHC, so you can easily determine whether it applies to you. Understanding these scenarios ahead of time can help you make informed decisions and plan confidently for the future. Here are some key takeaways. Remember to file IRS Form 8396 with your federal income tax return every year you're eligible, as the credit is not automatic. Filing this form is how you claim the credit. If you file taxes in person with a representative, please remember to provide a copy of your certificate and not the original. Keep your original MCC documents in a safe place for your records, and remember to contact TSAHC or your lender if you misplace your certificate. Should you refinance your mortgage loan, contact TSAHC to request a reissued MCC. Remember to save copies of your refinance documents for this process. You'll need to stop claiming your MCC on your taxes if you sell your home or turn it into a rental property. Thank you for watching. If you have any questions about your MCC, about its status, timing, or any changes like refinancing, reach out to TSAHC or your lender. TSAHC's website has FAQs, guidelines, and resources for current homeowners. Enjoy the benefits of your MCC.